Photo by Tang Zhe, VCG via Getty Images. Beijing has the means to fight the growing tariff burden imposed on its exports by Washington. That's according to Renee Mu, a currency analyst for DailyFX. One of the means at their disposal is damage control, by cutting domestic export taxes. That means higher tax rebates for exporters. Chinese export firms need to pay export taxes but can get a rebate once the products are sold overseas, says Mu. Last week, Beijing announced that, effective September 15, it will increase export tax rebate rates on 397 products, including semiconductors, machinery products, etc. China can also retaliate by increasing the tariffs on existing goods or tighten industry policy on American goods, says Mu. Either of these measures, however, could lead to damage to both sides. But there are a couple of more things Beijing can do. One is to file additional complaints against American tariffs with the World Trade Organization, WTO. China has already submitted a complaint to WTO seeking to impose $7 billion in sanctions against the U.S. annually. This could cover some losses if Washington's threat on $267 billion Chinese goods becomes real, says Mu. Assuming the tariff rate 15%, then the absolute value will be $40 billion. Besides, China's appeals to WTO are embarrassing for the U.S. After all, WTO is an American creation. It is the offspring of the General Agreement on Tariffs and Trade, GATT, a trade initiative taken by America back in the late 1940s to lower tariffs and quotas around the world and foster free trade. Another way Beijing can fight the trade war is by weakening the yuan further, offsetting the impact of tariffs. And finally, it can make the life of American companies operating in China miserable enough to change Washington's mind. What should investors watch? Equities are on the top of the watch list, according to Mu. Chinese equities are already weak and just hanging there. The tariffs have real impact to Chinese companies based on the data and what I learned directly from a couple of Chinese producers, and this will eventually reflect in the stock price. Some already did. Next on the list are global equities, especially U.S. technology companies with a large presence in China. Nasdaq 100 is already showing some signs of a top, says Mu. A trigger, such as escalated trade war, could make it happen, and there's the yuan-dollar rate, which is stable for now, with the PBOC's support. But this stability may not last, if China decides to use it as a weapon in the trade war.